Hey everyone. So today I want to talk to you about the stock market. I've been doing some research myself. I've listened to a couple of videos on YouTube about where the stock market will be for the rest of 2018. So I felt I'd throw in my opinion, give you my thoughts. In terms of my background, I've made a couple of videos already on investing. I made one on Bitcoin where I'm not going to say I predicted, but I felt that it was around bubble territory, and it's quite different from stocks. I won't get into the differences here, but I find this fascinating. I've been in finance since about 2005. As you'll see when I describe in this video, I do invest and trade myself. I've lost money, I've made money. In general, I know the aspects of risk taking. I also have my own business. So I'm familiar with the general idea of taking risk. It's not for everyone, and even for me, I'm a risk taker, but I would say I'm a more cautious one. I can't take big risks on things because it impacts my sleep, and then from there I go down. So just as a general note, it's good to know there are some people who can go all in. I'm not so much that person. I'm more cautious. Anyways, I wanted to give you my thoughts on the stock market. So, what's funny is you can go on YouTube and, every year you'll find someone who's predicting the great crash, and, a lot of conspiracy theories are thrown in there. I think there are some elements of truth in that, but a lot of it is just fluff and a little too much kind of extreme thinking. Now, why do you find all these videos? Well, there's every incentive in the world to make a video about the market crashing, because if you're right, then you can make a book, you can get publicity, because now in digital age, we have all the proof. You can put the date you published the video, and you can call yourself the expert. And if you're wrong, well, you can take down the video. Many people even leave them up, because who bothers to look at an old prediction that wasn't true? So you have to be careful hearing a lot of these, because the incentive is not in line many times with good investment advice. And what makes it worse is investors like being a contrarian. And if you're not familiar with the word, it just means going against the market. So right now we're still in a very much a bull market. A contrarian would try to go against the market by selling. And that's what I want to talk about today. Why is it attractive? Well, it's attractive to be a contrarian because if you look historically at any chart, when the price falls, when it crashes, it's always fast. This February, roughly speaking in February of this year, the stock market took a dip, and you can look and say, well, for 2 months the price was going up, and in 3 days it dropped. I want to be the one who was selling right at that point. The reality is it's very, very difficult to try to pinpoint the market. It's impossible. So it doesn't matter who the expert is, doesn't matter who you're talking about. Warren Buffett, Jim Rogers, no one knows. No one knows the exact time a market will crash. Whoever did, they'd already be a multimillionaire from any of the markets. I mean, it's not just stocks. There's commodities. There's many things, currencies that you could trade. Even Bitcoin. Had someone had the foresight to put everything and sell Bitcoin. Actually, they would have gotten a lot of money because just from December up until now, it's lost half its value from about 20,000. Actually, more than half. It was at a peak of around 20,000. Now it's, as of this video, it's around 7,500. So we can just put that part aside. No one knows when the price will crash. So what do I feel about the stock market? What's my opinion? I think long term, and when I say long term, I would say a 3 to 5 year outlook, there will be some correction. Now, people have been saying this for a long time. One of the best rules of investing that I've learned that I always follow is stay with the trend. They say the trend is your friend. It's boring, though, to do this because, this year has been a little bit more of a roller coaster, but in the past couple of years, the stock market really just inched along. It was great if you were investing, but you don't get that action that a lot of people like. But really, you just got to follow the trend. And the trend is still up, despite all the news and everything that you might hear. And I agree, there's a lot of problems. And I think long term, there will be a correction. It'll be quite nasty. I don't see it in the next 3 months, which is the purpose of this video. In 3 months, I'll make a follow-up. So For now, I'm still in the stock market. I don't put everything in there. I believe in diversifying. I think that's key. And so for me personally, I have a certain percentage that is managed professionally using index funds. For a while, I tried to do this myself, but I found I didn't have the time to move them around and to watch. And so it's just a small percentage. I personally like to be in very much control of the portfolio, but for this aspect, I preferred that professionals manage it. So I let them have a portion because I was just leaving cash on the table. And that's something I wouldn't recommend. You may hear people saying, well, it's better to wait for the opportunity, but you have to, if you have money to invest, you have to put it somewhere and take that risk. Now you can minimize your risk. Let's say you put 10% of your portfolio in the stock market and let's say the small cap stock index fund. So let's say there is a big correction. 20%, that's a huge correction. So you lose 20% of that 1,000. I think you can live. But having zero and just having it sit there in cash is not a good idea because inflation eats away a little bit of that money. There's no place you can earn any interest. In this day and age, I wish it were different, but as part of investing, you always have to adapt. It's always different. You have to, if you have money to invest, you have to put it somewhere. There's real estate, stocks. That's my long-term opinion. I think long-term we're in trouble because we're having the same. It's like a repeat of 2008. That interest rates have been very low. People can only put their money in the stock market or housing. These things are taking off. But I still think we're in the takeoff phase. I don't think we're in the starting to get dangerous phase just yet. But I'm talking about, let's say, 3 months. So with that in mind, what am I doing to slightly diversify? I made a video on silver. I'm putting some money into silver. For 2 reasons, and I think this is the best way to make an investment choice is, imagine you were on trial. Could you make a compelling argument? If you say, oh, well, I bought this stock because it looks nice, that's not enough. You lose money that way in the long term. So for silver, I'm interested because first, from let's say the last 10 years, the price is quite low. And just as I mentioned, you can't pick a top in the market, you can't pick the bottom. Silver, maybe it can drop. It was 2000s, it was around $8 an ounce, so I could be losing 50% of the investment. But what's nice about silver is even if I'm getting it now, I think it's relatively cheap, especially compared to where it was in 2008. And you can hold on to it. It can be part of your retirement because it's not going anywhere. It's one benefit of a precious metal is it'll always be around. So I think silver is relatively cheap right now. The silver to gold ratio is one of the best it's been, meaning relative to gold, silver is very, very cheap. And so that's another compelling argument. And if you do think that there's going to be a crash or something going on in the future, then you want to be in precious metals. Just look at the last crash we had. Silver and gold took off. General reason being, when there's panic, when they say there's blood on the streets or whatever you want to call it in the markets, people run to what's safe. The safest you have is gold and silver. They're the best safety kind of investments because unlike stocks, they're always going to be there. They don't crash really. They always will have some value as long as the world exists because even in some crazy, let's say, economy where you had no money, people looked at gold and silver, these precious metals, as a type of money. It used, the Federal Reserve used to be able to back their money with gold and silver. So I'm looking into that. To diversify further, I'm also looking at some dividend silver and gold mining companies. The reason I mention dividend is if the prices don't take off or it takes a little while for the crash to happen, at least you're getting some money just for keeping it there. You can research these companies. They're called the not the juniors, but the companies have been around for a while. I'm still getting kind of new into this. That's a pretty safe play. Put a little bit of money into there. If it earns a dividend and then the crash does happen, great. I still think it's better than just having your money and nothing. So I'm looking to put a little bit more into the precious metals. I've looked at VIX. I actually did get into VIX before we had all this turmoil earlier in the year, but it's a weird thing. You have to really kind of just, when the volatility goes up, you have to get out right there. And it's a strange thing to trade, but now it's low again, so I'm looking into that. And I learned from that experience, VIX, I kind of look at it as like, kind of like a sniper rifle with one shot. That's all you get. So once volatility goes up, your VIX thing will shoot, and you have to, on that day, pull the trigger and get out of it, because as soon as the volatility goes back down, that's what happened, then it's, you're back to where you were. And you can't say, well, when the big crash happens, the volatility will keep going. We don't know. And so it's a very unpredictable thing. It's an experiment. I think it's always, obviously you need to have the money. I don't put a lot into there, but you got to try these things out so you can learn what you're comfortable. So now that VIX is low, I never even closed the position. I don't think I pay any interest or carry on it. So I think I'll add a little bit more, and then the next time we have that big spike in volatility, I can just get out and I'll get some little return for that, and learned a few things. I mentioned silver, gold. I still think it's pretty high. I don't want to buy a lot of it because I'm waiting to see maybe if the price will drop. I don't know how much higher it can go. It hasn't come, it's gone up a lot in the past couple of years, hasn't come down a ton since the big crash, so it's still quite a lot for me to consider. My last idea is more for people who are outside the US, but if you look at the euro and the dollar, I've been following that quite closely, because I travel a lot in Europe, and if you do, or if you're traveling around the world, you just follow the euro. And the thing about the euro is, since its inception in 2000, only for a short period of time was the euro ever worth less than $1. Kind of makes sense, because if you look at the two GDPs, if you take all the GDPs of the Eurozone, compare it to the US, the Eurozone GDP is higher. So it makes sense why the currency should be worth more. So with this in mind, the dollar was quite strong these last few years. This year, not so much. And so there was a little bit of rebound that happened, and I traded in some of the dollars for euros. And it's a good lesson in picking bottoms and tops. Last year you could, it was as low as 109, meaning if you wanted to get €1, you need $1.09, which is quite low. Historically, it's usually 120, 130. So, anyone, if you are American, you travel a lot to Europe, or if you're just traveling for business, it's good now, I think, with this little rebound the dollar has been having, to load up on a few, because, last thing you want as you travel in the euro is 130 or 140. And then you just, because the prices aren't going to adjust in Europe, but you're paying 20% more sometimes for the same thing, and especially when you travel, it's lousy. And so, you can then put your money into euros, and depending on your situation, you can have an account that you can operate in euros. Just an easier way to diversify as well. So yeah, those are my opinions and my thoughts. I will make a follow-up video on this, and just to conclude, I really don't think in the next 3 months the stock market is going to have a big crash. It could even make new highs, just based on what I'm seeing this week and the past couple of weeks. I think the momentum will continue into the summertime. The fall, we'll have to revisit and see how things go. I'm still optimistic for the short term. The long term, though, there's going to be a correction. And how nasty it gets, what will happen, that'll all be time to tell. And that's why a lot of the suggestions I made in this video are planting the seeds for that, like a little diversifying a little bit more into metals, getting into euro and into some other things. I'm starting to lay the framework now where I wouldn't even mind having less and less and less exposure as it goes, and being more into these things. So I'm prepared when there will be a correction. We don't know when. When it happens, I at least want to say I made the proper preparations for it, and hopefully I don't take as much of a hit as the average investor. So hope you found this helpful, and look forward to making some more videos on this subject. Bye.